Hello, my name is Paul Fisher and I'm a senior consultant with Beckett Financial Services. We provide investment and financial advice throughout the UK. And in this video, I'm going to explain why I'm a self-confessed pension geek and why I've been a huge fan of pensions as a tax planning and investment tool for the last 20 or 30 years or so. You know, someone once said to me, when it comes to investments, they didn't mind paying tax once they actually make $1 million. But if they had to pay tax every single year, they'd probably never make $1 million. And this is where the humble pension scheme comes into its own. If I had to invent the perfect sexy investment, it would probably go something like this. It would start with a handsome government subsidy, let's call it tax relief, on investments going in. You'd pay little if any tax as you accumulate. In the event of your death, your loved ones would pay no inheritance tax whatsoever. And even if you live to 100, I'd make sure that the maximum they would pay is a marginal rates of income tax, so hardly any at all. And finally, when you come to draw from your investment, you can have up to 1/4 of it as a tax-free lump sum, the balance of it being drawn by you as either capital or income and taxed at your marginal income tax rate. So even here we can manage the taxman's expectations. But you see, I don't actually have to invent such an investment because it already exists. In fact, the only thing that isn't sexy about it is its name. It's called a pension scheme. But even here, with the advent of the so-called pension freedom rules that came into effect from April of this year, the chances are, because you'll never have to buy a pension ever again, we can even change the name. So if the only reason you didn't like pension schemes was because of what they were called, or because you had to buy a pension at the end of it, then things are certainly changing from here on in.